it goes without saying that we should keep bookkeeping in order for our Amazon FBA businesses. But it's a better question to ask that what kind of accounts should we have in our bookkeeping so that if we decide to sell our business, then it's easier for external people to verify our numbers and evaluate our business. That's what I'm going to be discussing in this video. Hit a thumbs up and subscribe to the channel to get more videos like this.
So our topic today is bookkeeping built for exit. So how to organize your books when selling your Amazon FBA business. And I mean, I know it's not really a sexy topic, but I mean, it's really something that we have to get done right. And I mean, of course, it goes without saying that when we are actually selling something, selling asset, then these like books need to be in order. But what's the deal with why can't we just use our company, I mean legal entity documents, like that kind of stuff? Like, why do we need to have specifically tailored for Amazon and specifically tailored for selling the Amazon FBA business? Well, that's a question that we are going to cover right now, because I mean the thing is that when you start discussing with aggregators, so people who are actually interested in buying your business, I mean, if we just send over the company books, those might actually be misunderstood. So this actually happened to me. So of course, I mean, like I've talked so many times before, so there are just so many different aggregators, and there are really different types of aggregators. But one thing that actually happened to me is that, I mean, this year I've been talking a lot with different aggregators, and so one of them was asking for these specific reports. So I actually sent them just the legal, the legal entity books, and something happened that I didn't quite expect. So they basically misunderstood it like completely, meaning that they thought that like the net profit stated there is actually the EBITDA. I mean, or the earnings before interest, taxes, depreciation, amortization. But I mean that no. I mean that's basically the reports that I had sent was the net profit of the whole company for the whole year. So this meant that taxes, salaries, I mean, all possible expenses had already been deducted. So I mean, it was actually a surprise for me, because I kind of assumed that, I mean, probably they know, I mean, they know this stuff. So, but it was a surprise for me. So when this happened, is that actually it can lead to lower valuations, because they actually have false impression of the numbers. And then secondly, it will prolong the whole process, because if they are not really understanding the numbers, then it's not good. So then you need to do another round of getting new reports, and if you don't have everything ready, then it's going to take it can take a while for you to get the reports in such order that it actually makes sense for them. So that's why it's good to, I mean, do this regardless of when are you actually planning to exit. So okay, like first let's go through some of the key things, so some of the key principles. So key things are, I mean, do everything in buckets. So that means combining different things together. So that means Amazon revenues all together, and then other revenues outside of Amazon all together, then Amazon related expenses all together, or actually not related, but actual Amazon expenses like FBA fees and those kind of stuff, and then other expenses all together. So this keeps it clean and easy to investigate. So the reason is really for them when they're actually doing this due diligence, it's then really simple for them to understand. Yeah, these numbers, match the reports on Amazon, and these numbers here match the bank statements, and so on. Then it's really important that we actually keep non-business related expenses separate to make add backs easily digestible. But actually even better is if we are not actually showing those at all. These will make it so much simpler if we are actually have the report in such a way that they can easily see the EBITDA and sellers discretionary earnings. And if we have any kind of adjustments there, let's say pro forma adjustments, then that's going to raise some questions. So it's best just to avoid unless there's really good rationale for using. But I think typically most of us, if we have really streamlined our Amazon business, we don't really have those kind of things. So that's definitely a good thing, but it's important to understand that if we have those adjustments, then that's going to seem a bit odd, or it's going to be a bit of a red flag. But yeah, in order to get our books sorted for this, there's many ways to do this, but let's go through 2 specific options. So these are 2 different ways how we can do the books, how we can do all the line items and so on. So let's go through option number 1. And this then assumes that there are no employees, no personal expenses in the profit and loss statement. And this really means employees. So if you're using like virtual assistants from the Philippines, they're not really your employees. They are basically just kind of like freelancers. Of course, it depends what kind of agreements have you made, but typically that's the case for at least most of us. But if you have employees, then this option number 1 is not for you. Anyway, so income, what do we need to have there? Or a better question is, how do we actually divide it into different areas? First is product sales. So this means non-FBA. Then refunds regarding those sales. And then, FBA product sales. So that's typically going to be majority of our sales, incoming sales, and then refunds. Then we have this FBA inventory credit. And by the way, all this stuff is can be like easily fetched from Seller Central and all these different reports. So it's basically, we are just taking different items from the Seller Central reports and then combining those into these different areas. So one thing there is inventory credit, then this FBA liquidation fees and shipping credits. And all of this stuff you get from Amazon, so it's not really a big deal. Of course it seems like a lot, but when we do it like this, then it's much easier for the aggregators to see that, okay, what's going on with this business? Like, so they are saying their revenue is X and the profit is Y. So what does it actually consist of? Like, how is it actually calculated? So yeah, then we have this shipping credit refunds, gift wrap credits and refunds, promotional rebate refunds, and these A to T guarantee claims, chargebacks, other income. So that's pretty much the way we can divide all the income that we are getting. Then let's go into the expenses and let's actually divide it to Amazon expenses and expenses not related with Amazon. So again, I mean, this is stuff that we directly get from Amazon. So I mean, we have this seller fulfilled selling fees, FBA selling fees, selling fee refunds, FBA transaction fees, transaction fee refunds, other transaction fees, other transaction fee refunds. So I mean, if you go to Seller Central and open your reports and information, this is what you see there, like anyway. So it's basically based on what Amazon gives us. So then we have this FBA inventory and inbound services fees, shipping label purchases, shipping label refunds, carrier, shipping label adjustments, service fees, refund admin fees, adjustments, cost of advertising, and refund for advertiser. And I mean, the way we usually approach is that, I mean, you probably understand that it's not me personally who's doing these books for our business. I mean, no way. Why should I use my time in doing books? Come on, man. I mean, of course, I'm used like other people for that, like, and bookkeepers. Like, even if I knew how to do all the different magic in the books, I mean, I still wouldn't do it, because I mean, that's just not the best use of my time. So the way we use this is that we just send this information to the bookkeeper that, okay, this is how we want to have the information displayed, and this is basically all the different accounts that we want to have there. So then we have other expenses. So advertising, Shopify fees, or I mean your other web store fees if you're running that. Then advertising and marketing, computer and internet expenses, contractors, taxes and licenses, warehouse expenses, then owner salaries. And if you recall, like I mentioned previously, so we are going to be 40 hours per business, basically 40 hours per week can be pretty much added back as the expenses. So I mean, when we have everything there, then it's just easy to get the report that clearly is the like the seller's discretionary earnings, then other expenses. But yeah, that's option number one. Then let's go to option number two. So it's pretty much the same way. I mean, we have income and expenses. So let's just see what we have there. How do we actually set up all these different accounts? So, I mean, we have Amazon sales, and actually this option number two, it has a bit of a more of a hierarchy than the first option. So this is actually a bit more complicated, and it pretty much depends on your needs, on your business, and what kind of setup you have going on. So sales and income, so sales, seller, fulfill, FBA sales, inventory credit, shipping credits, promotional rebate refunds, then total this Amazon sales and income credit. Number two is this Amazon income debit, so refunds, sale refunds, I mean FBA and non-FBA, then the shipping credit refunds, promotional rebates. Then we have the total Amazon income debits and total income. So that's, and then we have another, I mean, basically we get the total income, but then we just count the cost of goods sold, the inventory adjustment, like the actual usage, and total cost of goods sold. Then, and by the way, I mean, some of these might not be that necessarily that easy to understand, but I mean, this is all information we get from Amazon, and this is basically information that, I mean, if you don't get all these points, don't worry about them, because I mean, the bookkeeper will understand this. But yeah, so then we have, so once we have this income, then basically we get the gross profit, because we just have we just deduct those like cost of goods sold, which means the actual manufacturing of the items. But yeah, let's go to expenses. So Amazon sales and income credits, sales, seller fulfilled, sale, FBA, inventory credits. So it really much follows the same way as we had there, but it's basically just we have these different expenses. We don't need to go every single one, but it's pretty much like this. And here's actually something that makes much more sense. So we can see here that it is this kind of like hierarchy. So this is the option number 2. So we have the ordinary income and expenses. So under that we have the income. So it's basically the FBA sales and non-FBA sales. And then under that, I mean, the second line item is the Amazon income debits. And then it comes to cost of goods sold and gross profits. And then on expenses, we can see that the first one is Amazon expenses and debits and credits. So based on that, we get the total expenses and then this net ordinary income and then net income. So this is a bit more complex than the first option, but it really depends on your like business, like what kind of setup you have going on. But I mean, simplicity. So I mean, the simple, the better. And if we have this kind of setup, then it's much easier to, I mean, provide the reports in such a way that even a dummy can understand it. So I mean, what we should be doing is that, I mean, use some kind of bookkeeping tool that allows fetching these customized reports. So that can be like Xero, QuickBooks, or whatever tool you're basically using. The point is that we have a place for this information, but then we also have a way of easily fetching the information that we need to have in such a manner that it's basically easy to understand. And then we can get these reports that already, for example, already have been for example, we don't include those kind of expenses that not are really related with the Amazon business at all, because maybe it's typical we have expenses that are related with the legal entity, but it's not related with the Amazon business at all. So I mean, we shouldn't deduct those expenses from the Amazon business, because if we do, then I mean we are getting a lower valuation than we actually should be getting. So that's why it's really important that we have this kind of complete separate way of getting this information regarding just on what's happening on Amazon. And one thing that we did was that we actually, for one of the brands, we actually set up a completely new account on this Xero bookkeeping tool, and we basically just gave this information to the bookkeeper, and we are not going to be including like majority of the legal entity, like the core company stuff there that has nothing to do with the Amazon business. So we are basically just making it based on this, and then we can easily connect it with what's happening with the bank account and what's happening with Amazon and that kind of stuff. then it's really easy for anyone to do like due diligence and make sure that these reports actually make sense. But I mean, before even due diligence happens, we need to have reports in such a manner that it's easy for these aggregators to understand. So that's why it's really good to use this kind of tool where you can like customize things and use the accounts that really have it organized well. But yeah, that's pretty much it. Any questions regarding this?
What is the tool, this bookkeeping tool, which you mentioned?
Yeah, so the one I mentioned is Xero. So we have been using it for like many years, and it has like some nice nice integrations. I mean, it has actually much better integrations than it did before, because I remember actually we started using it pretty early when we started selling on Amazon, and I mean they have added much more integrations and features, so it's actually much more useful nowadays than it was previously, but it's working good. And let's say that you have a bookkeeper and they are already doing their own thing. They are already like, I don't know, doing their own tools, reports or whatever. Then, okay, fine, that's good. That's basically our legal responsibility in making sure that the books are made. I mean, books are made in such a way that the tax office like accepts them. For example, I mean, there are different requirements. For example, Finland, Estonia, Hong Kong, US. I mean, each of these countries have a bit of a different way of approaching like what they actually require from the books. So that's fine. I mean, that's our like legal responsibility. But then another point is that when we want to sell our brand, then we need to have these documents in such a way that it's easy for them to go through and understand how do all the income, I mean, what does it come out of, and especially like the expenses, because the expenses is pretty much that is going to be decreasing our valuation. So we don't want any kind of expenses to impact our valuation, and we definitely don't want any expenses there that shouldn't be there. For example, the company administrative stuff that doesn't even impact the Amazon brand. Yes, so I really recommend that start either use one of these different options. So, but the main thing, as I mentioned there, and the key things are to do these in those like basically in those buckets and have these non-business related expenses separate. And yeah, so then it's much easier for an outsider to understand what's going on.
So what do you think? If you like this video, then hit a thumbs up and subscribe to the channel. And if you like to get more of these type of videos, then make sure to join our free Facebook group where we give tons of different resources. Just hit comment and we will contact you and make sure to add you to that group. See you there.